Sam here, and I'll be doing the free video for Friday, August 16th, 2024. So the market still has about 2 hours left to go before the close. Figured I'd just go ahead and do the video now. I don't expect too much to change. Maybe that's famous last words, but the market seems extraordinarily well supported. Pretty much every penny downtick on the SPY is finding buyers, so I don't imagine much is going to change here. We could spike higher into the close. I would be pretty surprised if we didn't close at the absolute highs of the week. It's just been a very strong week overall, and we've seen some really strong 5-minute price action, where every time that there's been a kind of a break of support, so you'll have a support level, it'll just be a flat support level, price will be doing this, it'll come down, break the support. Oftentimes they give you a 2-bar break and then immediately go and back above the support and make a new swing high. And as long as you continue to see that, and as I tell you about it, it's actually happening again, on a 5-minute chart, if you can't damage a 5-minute chart, you're never going to damage a 15. If you can't damage a 15, you'll never damage an hourly. And certainly if you can't damage an hourly, you'll never damage a daily. So this is just a lot of words to say one thing, and that is the markets in this exact week, and we'll see if it continues into Monday, because today is OPEX and the board may reset on Monday, which it will. As long as you have that, really you can only look at the market one direction. It's either you're looking to buy or you're waiting to buy, right? Now, if that dynamic happens to change and you start to see 5-minute continuation candles on the SPY on Monday, which is possible, then we have a different conversation. But for now, just be aware on very small time frames, this market is a buy only. As we look at it over here on the larger time frames, the weekly and the daily, I came into the week and I stole this title from, I think it was Josh Brown's podcast, The Dumbest Crash Ever. And I put that in my notes, The Dumbest Crash Ever. And it really does seem that way. Not only does it seem like the dumbest crash ever, but it also seems like it's a potential bear trap that's been set here. And if that is the case, and a bear trap has been set, then this thing has all of the makings to get to a new all-time high. So I want to point something out to you that I think is pretty important here. If you run a retracement, a Fibonacci retracement from the absolute high to the crash low, if you look where the 618 is, this is the golden ratio, right? This is the golden number, the 618. Notice how it overlaps, the magenta line, the 618 overlaps with the blue moving average, which is the daily 50. Oftentimes, in overwhelming cases, I would imagine, probably at least 65% of the time, maybe higher, price would get there, pull in, and if it's still good, it would make a higher low. So kind of like a bottom here, a higher bottom there, and then attack higher. Notice how it got to the crux here of resistance, and then instead of pulling in, it gaps and runs right to the next level, which is the 786. And then today, it's actually trying to breach through that level and actually picking off stops from this candle here. Really impressive price action. That's uncommonly impressive, actually. But what it does tell me is that if it breaks this zone here, which would be the zone that would contain bulls from getting a new all-time high, and it is doing it as aggressively as conceivably possible. If it breaks this box that I've just drawn in, this opens up the door very quickly and very easily for a new all-time high. Okay. Also, I won't show you this on the charts, but if you know what you're looking at, when you look at the yield curve, I've talked to you guys about the yield curve. The signal is 0 on the yield curve. Let's just draw a line. That's the 0 line. We've been inverted, so we've been trading below 0. Last week, it went above 0 for just a brief little bit, and I think that might have contributed to some of the fear regarding what was going on with Japan. Very quickly, it went right back below 0 and is now kind of trading in this range here. Historically, when the yield curve crosses 0 to the upside from being inverted, historically it does not go on the first test. Last week was the first test, Typically what it will happen is exactly what is happening, which is it'll breach, it'll come back, chop around again in inversion below zero, and then on the second test is when it has the big spike and actually goes with. The reason this is important is because this period in time, which is exactly where we happen to be, is actually kind of the last leg for stocks. And it can actually be the strongest leg for stocks before this ends up happening later on, and that actually creates much bigger potential down moves. So understanding that if we are in this period here, and the evidence from a Fibonacci and technical point of view is telling us one thing, maybe we should listen. And this is just another long way of saying the recipe is certainly there for new all-time highs, mechanically, technically, as well as historically. Lastly, my favorite stock here is going to be Meta. And credit where credit is due. I wasn't looking that seriously at Meta until Henry brought it up. So if it works, he gets the credit. If it doesn't work, I'll take the blame. But Meta here, Max Bull, again, I'm looking for big cap tech here, right? I just think that's going to be the easiest play as long as all of the pieces that we've just talked about are in place. So I'm looking for max bulls there, and I'm looking for weekly squeezes. And just keeping it as simple as that, right? So Meta has the best score of the mags, has a max bull 50, and a weekly squeeze. So check, check, check. That's everything I look for. So just wanted to bring you kind of an overview there in terms of the index, the reasons why I'm looking at it that way, not just on the chart, but also historically from a yield curve perspective, from a mechanical point of view, from a timing point of view. All of that stuff's kind of lined up. We'll see if on Monday it continues to be this aggressive to the upside. It'll be tough to see it, but at the same time, when the market reprices, it reprices hard. So we could just be seeing a repricing that's factoring in the less amount of risk that the market perceives in the short term, the lower interest rates, as well as everybody piling back in to the trades that they dumped on the way down. All right, guys, that is my time. I hope it was helpful, and I'll catch you next Friday. Have a good weekend. Cheers. Hey, traders. This is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.